Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for Meta Platforms Incorporated, stock ticker META. This is the Facebook, Instagram, WhatsApp parent company. Here we can see that the stock is just continues to just push lower. Yesterday we were kind of pointing out this 38.2% Fibonacci retracement of this most recent move lower, and we were saying that we were seeing a bit of an upside break here. In this figure, which would have come in at roughly just above 490. And we said that we were technically seeing a break here to the top side. We even did see a bit of a close above there on a 4-hour basis, as you can see. What we're referring to here is this orange line. We did see an upside break here. There was a bit of a recovery, a bit of a relief rally yesterday. But the unfortunate reality was that the following day, following that price break to the top side, we were already seeing price gaps lower. And then if you go back to the prior video on Meta that I released yesterday, you'll see that I said I was suspicious of this price break here because normally you would see a bit of follow through. I mean, if this is not a false breakout, you really should be seeing more of a move here to the top side because you've just removed some resistance from the market. But this really didn't occur the following day here. As I was mentioning yesterday, there was a significant price gap that developed on the charts here. We can see that here. We outlined this price gap is coming from roughly, so be just above 488, and then falling to. I mean, even if you use the top of the wick from the following trading session. You can see that it's more than 12. It's roughly $12 in share price movement. So it's a significant gap to the top side. So this is not normally the type of activity that you'd be seeing after a major resistance break like this. And the 38.2% Fibonacci retracement is an important price move. But the price gap here lower really did call this rally here into question. I mean, was this a valid rally is really the question that we were asking here. And as we can see here from today's price action, this was not a valid price break. This was a false breakout to the top side here. This upside movement did not occur. And the major clue here was this price break to the downside. So overall, we can point to the fact that the technology space is being punished quite heavily at the moment. Stock markets in general are trading lower. But I think that this, I've said this many times now, I really do think that this stock is an underreported story here because the moves have been extreme. And it's sort of been, I think I was calling it a canary in the coal mine. Like this is acting as sort of a leading indicator here of, price declines that are likely to start happening in other stocks. Like we're sort of seeing it in Meta first. And then some of these other declines are happening in other areas. Palantir saw a pretty significant decline lower, even though that stock was mostly immune to some of the downside selling pressure that we were seeing during kind of the middle of July. So even the stocks that were faring better, are trading under pressure at this point. And look who was leading, the leading indicator here. In my view, this really was Meta. This has been an unreported story. People are kind of just dismissing this stock as a silly little social media company or something like that, but it is a Mag 7 stock. And the selling pressure, I mean, this is a massive destruction in market cap here. If we're looking at the total, the total share price values and things like that, there is a large amount of money that has been given back here in during these declines. One thing that I would point out here is that this really does seem to just be a support break more than anything else. I mean, we're not seeing any drastic changes in the trading volumes themselves. I'll try to get a good view for it. Maybe right here would be the best view. These most recent movements, the spike lower, this is the trading volume bar. It's not exactly substantial. What we can say here is that, for the most part, this downside price movement has been short-lived. I mean, we did see a bounce here where this is a red candle, but you can see that there's a very long wick on the candle, which means that there has been a rejection from these lows. I was kind of suggesting previously that we have not seen the price lows until we drop below 455, and that does seem to be what's playing out here. We're seeing it. We're seeing a bounce, but we're getting to a point here where these declines can't really continue much longer. I mean, how much further can prices really decline? The prior support zones that we were watching came in at 454.90, and as we can see here, this area has been breached. So these prior price lows, we did see a bit of a bounce here, but we were kind of worried about this because this had some characteristics of being a false breakout to the top side. This 38.2% Fibonacci retracement was broken, and we even got a 4-hour close above this area. As you can see, this green candle is above this orange line here. So the price closed above that area, but we saw a sharp reversal lower relatively quickly. And there was a major price gap here that really did signal the possibility that we were going to at least retest these prior lows. These prior lows from May 31st came in at 454.50. This is kind of the level that I've been watching here and mentioning. And as we can see, this level was hit. We saw a brief spike below here, and now we're finally starting to see some alleviation of that selling pressure. I mean, I don't want to get too optimistic here because this is still a red candle, but the fact that there's such a long wick here is a little bit encouraging because if we start to see a green candle here, that would be a reversal pattern. We're not quite there yet, so we do need to keep analyzing this stock. But this really has been an underreported story here, and I do think that it's sort of acting as a leading indicator for what is happening in the market as a whole. You wouldn't normally expect that. You would normally more expect that to be from Microsoft or maybe Apple, something like that. But I don't know. I mean, if you look at this price chart, who really kind of led the way here in terms of signaling these broader market declines? In my view, it's been Meta Platforms so far. So here's the current market update for Meta Platforms Incorporated, stock ticker META.